So when it comes to your investment properties, you always have to keep receipts. Hi, I'm Andrew Jeffers and this is the 2-Minute Accountant. One thing about the Australian Taxation Department is each and every year they let us know exactly what they're looking at. And this year, some of the things they're looking at are personal deductions. When it comes to your investment property, the most important thing that you can do is keep a copy of the receipts. So when it comes to receipts, there's two things you need to know. There are two sorts of expenses to do with your property. One is a capital expense, and the other is just a normal expense that you can write off in that particular year. So when it comes to expenses for your rental property, there's pretty much two different types of expenses that you can have. There's capital expenses. These are expenses that you have to write off over a period of time. Think about it. Carpet, does it last for a year or maybe 10 or 12 years? The other expense that you need to worry about are the day-to-day stuff, the things that need to get fixed. So it might be a little bit of lino, or it might be a little bit of a bench top getting replaced. So really, you need to make sure you classify these as two different things. Are they capital, or can you write them off in that 1 year? Now, the other thing that we always talk about when it comes to property is negative gearing. So what is negative gearing? And if you remember, quite recently, the Parliament and the budget has been discussing whether or not we should make changes to negative gearing. So how negative gearing works essentially is this. If you're getting income of $10 from your rental property and it's costing you $11 for your rental property, then you're making a $1 loss. So you can use that $1 loss across your income that you get from somebody else as an employee. So how does it work? Well, if I earn $100,000 over here and I make a $1 loss on my property here, then I'm not going to get taxed $100,000 anymore. I'm going to get taxed on $99,000. So when you hear the term negative gearing, that's what it means. You are making a loss in your investment property that you can then offset against your income over here. Now look, whether that works for you or not depends on your situation. And sometimes we also talk about a cash loss, but not for today. Today is just trying to keep in mind that we must keep these expenses so that if we're in a situation where we can utilise a negative gearing to move the loss across to our PAYG income, that we can do it. So essentially, you might say, Andrew, I'm getting a new roof put on. The old roof was tin, the new roof is tile, or tile. So is that a replacement or is that a capital improvement? So what the tax law says on this is that if you have something that is a replacement, it replaces the existing infrastructure on exactly the same sort of material, it's a replacement, and some of those things we can expense straight away. But if we change the nature, even though it's a roof, I know it's a roof, but even though it's a roof, if we change the nature, it can be construed as a capital improvement, which means there has to be a different tax situation applied to that. So what I'd say to you first is, before you go spending any money in relation to major modifications on the property, go and talk to your accountant first, or by all means, check out our page where we've got a step-by-step guide. Now one thing, don't forget, the tax department has a fantastic guide on rental properties, and they bring this out every single year. It is excellent, I highly recommend. So get onto ato.gov.au and check it out, or do a Google search on rental properties ATO 2016.